Hi everyone, stock market update, and what a crazy week it's been. We better get right into it. Whilst I'm speaking to you, and it is 3:30 UK time on the 26th of May, we're going to look at the week that's gone, more importantly, the week ahead. I've also got some trading positions on. So I'm going to talk about investments, but given the pace at which the market's moving up, I also want to just take you through some of the live trades as they're going through in any event. I've got positions, leverage positions, these are on Microsoft, US Tech 100, Salesforce, Meta, Alphabet, Amazon, and Apple as well. And I will keep an eye on these and tell you what I'm doing. I will be adding to these leverage positions and probably taking them off before the end of the weekend, just because I am seriously overexposed in them and I don't want to be taking that into the weekend. But why am I doing it? Well, because in that short space of time, whilst the rally's happening, there's money to be made. Could you do a full-time job of just that? No, because these kinds of rallies don't happen frequently enough with enough confidence that you could or want to do that at all. So I'm going to leave that as it is in that regard and not sort of go crazy on it. And it does mean taking some money off at times. Like I've just sold a couple of Meta positions at the same time. This is price earnings ratios, by the way, of Microsoft, Apple, and all the other S&P 500 companies. You can see the prices are only cheap on energy, oil, and gas. Everything else is ridiculously expensive. So that gives more sort of ammunition to those who think the markets are going to fall. That's the performance over the past week. As I've said, semiconductors, the oxygen has been sucked by Nvidia, which we picked, as you'll know, in January through my Telegram channels. And if you don't know, then where have you been? That's the links to access my Telegram channels, where I tell you what's going on each week and beyond as well. So you can see where the money's been going at the moment. And my job is now to work out for how long and which other ones have been overlooked, if any have, and what might we want to do with those. Okay, so that's basically fundamentally my job. This is PEG ratios, price to earnings growth. Everything looks red as well. Look at that. Nasdaq's up 27%. My very first column in the Financial Times in 1999 began with I'm selling all my UK holdings to buy US, and this is exactly bloody why. 27% up year to date. The UK up 5%. So my friends who are tracking the UK market, their pensions are up 5%. Me, who's tracking somewhere between the S&P and Nasdaq, is up between at least double to 6 times as much as my friends, and that's in the first 6 months of this year. You can see why on SIPs and ISAs you'd be furious if you're British with your IFA and everybody else, because that's the crap they lend you in. They put you into that and you end up not getting the kind of results you should be getting. As I said, I'm just keeping a side eye, so excuse me if I don't look focused on, for instance, Salesforce. We need to buy a bit more of that. I can see I already own it, but these are the extra trades that I'm doing as leverage on top of it to make that much more, because it is all going crazy at the moment, which is good. Doesn't always go this crazy, but it is at the moment, and whilst the times are good and it is doing that, I have no problems adding and taking away. I've just sold a few Apple just to close out some of those, just because I've got too large a position on it, and I may well add back into it. We'll see on the intraday, but this is just intraday as we're speaking. So that's the S&P 500. The MACD is flat to a rising. That will continue rising. It's a good benign background against which to buy into individual stocks. As I've said, week in, week out, the FTSE 100 is dropping because of the headwinds, and the MACD, again, the monthly indicator, gives you some indication of that. Apple shooting ahead. We like it fundamentally. We don't like it just because the analysts like it and the news stories are all positive. We've liked it for, well, years now, but you can see also, if I want to get a quick angle on it, the MACD is flat to rising over there, and that's a good sign. That's a good sign. So that's all good news on that one. And these are the Apple targets on average. The analysts think 178. I think 210. Alphabet, straight through the roof. Again, the monthly MACD, flat to rising. It's just stupid money being made, and you can see all the banks are telling their clients, and the clients of all those banks are going to be very bloody happy as well. So for the conspiracy theorists out there who think banks just lie and tell you one thing and tell their clients something else, well, not only would that be a criminal offence, which they might be willing to commit, but they've been telling buy, and the market's been going up as well. So, hey, Mr. Conspiracy, where does that leave you? I tend to think conspiracy theorists are a bit dim Anyway, average 131, Google's 124, 160, yeah, at least. Microsoft, again, in that channel, and you can see it's going along that line, and we said it would since January when we bought more into it after last year's falls, and it has, and it is, and it continues to do so. It might fall back a bit on some profit taking, and if it does, so be it. More US tech. It pulled back a bit. I think people panic, so I'm buying more, and we'll see what happens. This is ridiculous. This is just sustained and going, and I need to be looking at the markets a bit more than I am doing at the moment. I've got a talk later today. It's Friday anyway, so I'm going to close these before the weekend because I'd be way too exposed for the weekend. I do not want to be left this exposed, but I don't mind being this exposed for a short period of time on the trades. I've got these anyway as long-term investments. But when they rally this much, this quickly, I don't want to just hang around and wait. I just want to take some of those profits and make them. Microsoft 325, 420 is the high. That's where it's going to go. Amazon, you can see again, upward angle, flat to rising. You see what the banks are saying over there. Okay. And it's going to go to 220. It'll hit an all-time high this year as well. Disney now, just to show you everything isn't tech and everything doesn't go wonderfully well. That hasn't worked out so well for us. I don't think it's down 25% from the highs since we bought it, because we bought it there and it's down here now. But it just shows. And would I get out of it? Potentially. I'm not out of it yet. I do want some diversification, so I don't just want to willy-nilly get out of stuff. But would I get out of it? And then what would I do if I got out of it? Well, I'd probably put the money in more Microsoft, and we bought more Microsoft leverage position. Leverage is CFDs usually that I do. Okay, sometimes spread bets on my personal account as well. Okay, so that's where we are with that. And we're just closing out some positions on Meta. May well add more. US Tech, as I said, it's US Tech 100 is an index of the Tech 100 stocks. And that is the one which is going through the roof. Disney, there you go. Where are we? 88. Some people think it'll go to 147, some to 121. So it's got good potential upside. Return potential 37%. But I'd rather be in the tech stocks right now. So that might not get to stay very long in my portfolio. Nvidia, of course, one of the ones we picked in January. I've been banging on about it every week. And now you can see starting to just get a little bit overboard at this top end, obviously, given how high it's gone. And one will have to decide what we do with it now. But this week, I'm still holding on to the long positions. And even the analysts are saying, whilst they're moving the high watermark to 600, it's currently at, 379, according to that. Some of them are now starting to get a bit more cautious with it, obviously, because things moving that quickly, that fast. Tesla, they say, is the classic AI move. I don't know if that is, but in case it is, then maybe that's another one to play. We can see the MACD flat to rising. You can see what the analysts are saying. You can see the percentages there. Meta, look at that V-shaped recovery, and I didn't think that would happen, but it did happen in Meta. Time to bomb more Amazon by the looks of it. Jeez. Okay, so I'm speaking to you at almost 4 o'clock on 26th of May, and if you do look at the intraday chart, you'll just see the skyrocketing these stocks have done today. Amazon's another one. Again, I'm putting positions in this which are far larger than I would normally feel comfortable with or I'd want to do, because I know I'm only going to keep them in for a short period of time and I'm going to watch them. And by short, I mean I will be out. I don't normally trade like this, but these are rare opportunities. I will be out within the hour because I've got to leave for an event, and I would not want to keep these open at that larger position. They'll all be sort of made a lot more sensible before then. Again, Microsoft, just have a look at what's happened with Microsoft today. It's not normal. And so you make a killing, you take the money, and then you run. So that's Meta. And yeah, we're still on it, long for the long term. You can see the numbers. Chipotle is an AI play. It's not a Mexican restaurant. It is an artificial intelligence company. And if you don't believe me, just look at what the CEO has been saying. And as you know, we bought into this a bit late, you might argue. Should have got in back there, Alpesh. Yeah, probably should have got in back there, but we didn't, and we've made a good return, and we're going to continue holding it in that as well. And you can see the numbers on that. And time to buy a bit more Microsoft. Yeah, I think we've taken. The thing is, when you take some of the profits on these after a couple of minutes and it rallies and you're over leveraged, you then need to replenish the position if it goes back up in the same direction. as well. Let's get out of that one. Let's get out of that one. In Meta, just sold a couple just because it's pulling back a tiny bit. And it really is trading by seat of your pants, which I don't normally do, but it's nice to be sort of at it again, as it were, like the good old days when I was young. And we'll see what happens. Let's just close some of the Salesforce ones because they've been rather good today, and there might be a little bit of a pullback, and I don't want to take that. So ServiceNow, fantastic. Another one which we purchased earlier in the year, flat to rising, and you can see in the tech space how well it's doing as well. And those are the analysts. I think the high watermark is what's going to happen with that. Listen, go to campaignforamillion.com, see more of my stuff on there. Have a look at my links, and you'll be able to follow me live as we do this stuff, and you'll be able to see it on Telegram. You'll be able to see my webinars and all the rest of it as well. Okay. So that's the place to go to get more information. Sorry, I've been a little bit distracted by looking at what's been happening over there in this week's weekly update. So it's not my usual sort of focused and just purely on that. But that just goes to show you, could you do this for a living? You probably couldn't, because you don't get these kinds of moves every single day, every single week. And that's what restricts it. So thank you all very much. I better run.